Be Wealthy and Smart, episode 1480.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is there a real estate buyer's market starting? Now, it's interesting to see that interest rates have been trending lower and are back to where they were in October of 2024. As of today, the average 30-year fixed mortgage rate is 6.65%. Some say the U.S. housing market may be the most buyer-friendly since COVID-19 days, and Realtor.com senior economist Joel Berner told Fox Business that now is a good time for buyers to enter the market after years of subdued transactions, especially in 2024, which shaped up to be the slowest year for existing home sales since 1996, according to the firm's data. He believes the housing market is transitioning from a seller's market to a more balanced one, with increased inventory, more price reductions, longer time on the market, and lower listing prices compared to last year, with all contributing to the current buyer-friendly conditions. Berner said, independent of mortgage rates, we're seeing things move in a pretty buyer-friendly direction right now, adding that falling mortgage rates aren't necessarily indicative of a buyer's market, as they can lead people to rush into the market, driving prices higher. Mauricio Umansky, founder of the billion-dollar real estate brokerage The Agency, doesn't expect to see the same level of opportunities for buyers as during the housing crisis of 2008 and 9, but he is confident the housing market is moving into a buyer's market. So I just want to pause there and say we have been following the real estate cycle. We don't think we're at the peak of the cycle yet. We have that actually ahead of us as interest rates are beginning to trend lower, and I think will go lower this year as the National Association of Realtors predicted a 5.5% 30-year mortgage rate at the end of 2025. And I think we're probably going to hit that target. The article goes on to say, like Berner, Umansky said that the current market conditions are favoring buyers, noting that there are great opportunities for buyers to be aggressive and write strong offers. 2025 is going to look significantly better than that because of what's on the market right now. A lot more options for folks, a lot better prices for folks, and people deciding that it might be a good time to get on the sidelines, Berner said. Umansky said inventory is beginning to rise, and as a result, sellers have become more lenient with regard to price. Right now, Umansky said there will likely be some reductions in asking prices, though nothing extreme. Higher mortgage rates over the past 3 years have created a golden handcuff effect in the housing market as sellers who locked into a record low mortgage rate of 3% or less when the pandemic began have been reluctant to sell, limiting supply and leaving few options for would-be buyers. Berner said the walk-in effect has really been in place the last couple of years. We're not really in a mortgage rate environment where we can say the lock-in effect is dead. I think what we're seeing is a lot of people who have been waiting out in the market and waiting on mortgage rates, but at some point families grow, jobs change, and people have to move. And so that's why we're seeing more listings right now, including those that maybe would have listed in the last couple of years but decided not to. Realtor.com's February housing data highlighted how sellers are increasingly adjusting to slower market conditions as the share of homes with price reductions rose significantly last month. According to its data, the number of homes actively for sale has grown for the 16th straight month, increasing 27.5% in February compared to the same period a year ago. The number of homes sold, including homes under contract, increased by 18.2% compared with last year, according to the data. Homes also spent 66 days on the market, which was nearly a week longer than last year. Yeah, so right now we have a bit of a lull, but it is the springtime, which is the hottest time of the year usually for real estate. This is where families need to move and get situated before school starts. But interest rates haven't been cooperating that much, although they are back to where they were in October, and they seem to be heading lower. The good news is the Fed has now priced in 0.75 percentage point cuts for this year instead of only 2. So we're heading in the right direction. Rates seem to be going lower. Inflation is trending lower, recently coming in at 2.8%. So things are heading in the right direction. I think by the second half of this year, we should see a stronger housing market than what we're seeing now, continuing into next year and possibly peaking at the end of 2026. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.